Welcome to a sponsored webinar by Practice Ignition hosted by CPA Australia, your guide to compliant client engagements. My name is Lauren Murdoch and I'm an event coordinator at CPA Australia. We have people joining us from all over the country for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. Today, we'll be taking questions through our Q&A box. Please direct questions to all panelists. We will address questions during and at the conclusion of this webinar. And for any troubleshooting queries, please send a message to the host using the chat box. I would now like to introduce Ethan Cooney, Senior Partnerships Manager at Practice Ignition, who will introduce you to the rest of the panel. Hi, Ethan.
Excellent. Thanks so much, Lauren, and fantastic to be here. G'day, everyone who's tuning in, and hello to anyone who's watching the recording as well. I know that it's a really busy time for a lot of you, so thank you for all of you who have taken time out of your day to join us, and thanks to all of you who are watching the recorded session as well. So as Lauren mentioned, really privileged to be sponsoring and hosting this webinar today. For those of you who haven't joined us before, my name's Ethan. I manage the strategic partnerships for Practice Ignition. I'm based out of Brisbane. This is the first webinar I've done since coming back after 2 weeks of leave on my honeymoon as well. So just getting back into things, and it's good to be talking about all things engagements and compliance again today. So nice to be back, and I'm sure we'll be seeing a lot of you up here in Queensland given this morning's announcement around our borders as well. So the topic today is around compliant client engagements, and it's something that's quite relevant and poignant, particularly at the moment, given all the changes that we've had to government assistance stimulus and so on that's happened over the last 12 to 18 months. And it's a topic that we get questions about every day. We do have a vested interest in this topic in that our software that we provide to over 5,000 firms does provide a solution for accountants and bookkeepers to automate engagement letters and proposals. But today we're really going to focus on the what, the why and the how around client engagements, and hopefully answer a couple of really common questions for you as well. Super keen to keep this quite interactive as well. So if you do have questions, please drop them in the Q&A. We'd be more than happy to answer those as we go. And we like to keep these, I like to say, sort of an informal but informative chat as well. So the panelists will be jumping in. Please feel free to share your thoughts and your experience in the chat as we go, and would love to get your engagement as much as possible. So I am very privileged to be joined by an all-star panel today, and we've done several webinars, Beck and I, over the last year or two. Beck, I think it's getting probably close to 60 or 70 now, so just a handful, around a whole bunch of different topics, but client engagements and the legislation surrounding that has been a very popular topic that we've been talking about for some time now. Beck, for those of you who haven't seen you on a webinar before, would you like to take 30 seconds and introduce yourself to all the listeners?
Thanks, Ethan. My name is Rebecca Mahalik. I am an accountant. I've been an accountant for about 20 years now, and I am the director at Business Depot Sydney and head up Sydney operations for Business Depot. I'm also the head of accounting at Practice Ignition, which means that I work with Practice Ignition a lot to educate the wider community around engagements, why I'm on this webinar today. And like most of the people on the webinar, I've had a very difficult 18 months trying to meet client expectations and stay on top of everything that's changing every second. And what I can put my hand on my heart and say is that having a robust engagements process coming into this has definitely helped Business Depot get through it just that little bit easier at every step along the way, if not a lot easier.
Awesome. Thanks so much, Beck. And also the accounting firm with the coolest branding as well. So go and check out Business Depot if you haven't seen them as well. Greg, we've done several webinars with you in the past. Thanks again so much for your time today and presenting. And for those who aren't familiar, would you like to take 30 seconds, a minute, and introduce yourself?
Thanks for the kind introduction, Ethan. Can I also say hello to Beck? We've done a few of these before, not the 70 odd that you've just been talking about. Most importantly, can I just thank Lauren and CPA Australia with yourself, Ethan, for asking us today for me to represent the board. So a little bit of background to myself. I've been on the board for 6 years, a very active board member of the chair of the board's conduct committee, which deals with investigations and conduct of registrants out there. I've been in profession for 25 plus years, both very large firms and smaller firms, but importantly, I've also been on the other side of the fence being a client. So looking forward to today's discussion. Back to you.
Absolutely. Thanks, Greg. And really pleased to also be joined by Tony today, who's a senior assessor from CPA Australia. This is the first webinar discussion that we've done with you, Tony. So huge welcome to you and thanks again for your time. Would you like to introduce yourself to everyone who's listening in? Oh, I think he might be muted. It wouldn't be a webinar if we didn't have one of those.
Okay, I get to go first. All right. Yeah, look, I just said thank you for the warm welcome, and it's a pleasure to be here. I'm a registered company auditor. My background is in audit, where I've spent most of my career in public practice. The last 18 years or so as a partner in the audit division and special projects. And recently I joined CPA as a senior auditor and working in developing and moving forward in the best practice team, the new best practice program that we have going.
Awesome. No, that sounds really exciting, Tony, and thanks again for joining us. So we're going to get stuck into the content. And as I said, you've got an incredible amount of collective IP here on the call today. So please make use of that and ask any questions as we go. But the three main areas that we're wanting to cover off on today is the importance of engagements in managing, reducing scope creep. We know that this is a huge issue for accountants in practice all over the country and around the world from our experience. We're going to dive into what your obligations are surrounding client engagements, what the guidance actually says, and demystify some of those common questions that we get from firms every day. And then we're going to talk a little bit around how you can use technology to save time and stay compliant. Beck has been using Practice Ignition for a number of years, and as she mentioned, has really been crucial in helping form our product strategy moving forward and staying relevant to the requirements for practitioners. And I'm going to share some of the updates and the partnership that we've developed with CPA to help members stay compliant in their client engagements. So I guess the three key areas that I'm looking to focus in on here and why we're actually having this discussion. Scope creep for one, given all the changes to legislation, stimulus, etc., all of the last minute grants and things that have come up. We're seeing scope creep really become an issue for a lot of practitioners, and that is obviously where you're undertaking work that is outside the scope of the initial engagement with the client. And so we're wanting to tackle that and give you guys some strategies on how you can mitigate that within your firm and make sure that you're actually getting paid for all the good work that you're doing. We're seeing debtor days still incredibly high, on average sitting around 80 for Australian accounting firms, which is seemingly quite high. And Beck is going to share some insight into how an engagement strategy can actually impact the cash flow and debtor side of your business as well. And then just talk generally around the impact that it's having on your client relationships, client expectations as well. So those are the three reasons why we're discussing this topic today. But Beck, I was wondering if you could just share briefly here, and throwing this one as a little bit of a curveball to you, but what have you seen with regard, obviously you've had a long journey, being an accountant, you would have seen many different firms, many different styles of engagement. You were previously not using technology, now you're using PI to manage the process. But overall, what are the benefits that you've seen in your business and within your client relationships after putting a structured process around your client engagements?
I suppose I'll start with actually just really briefly explaining that structured process. So our engagement strategy isn't just we meet our client, we have an engagement letter, and then we never talk about it again. That's not really an engagement strategy. That's doing your bare minimum when you're taking on and onboarding a new client. We have an engagement strategy that sees us re-engage our clients every single year, go through their services, make sure that it's all up to date, plus a strategy that sees us re-engage clients during the year if something changes. So we've really taught our clients to expect an engagement before we start work. And the best thing around that is that we get sign-off from our clients before starting anything, which means they know what work we're doing, we know what work we're doing, and everybody agrees on a fee before we start. And it's just, it's all about training clients to expect that they're going to be receiving these engagements. And it means we get to talk to them more often during the year in a real clear way around what value it is that we're giving them. What is the service that we're providing? Too often clients will ring you during the year, want an ad hoc service, and expect you to do that, but don't realize how long it takes. When you go to the effort to actually engage your client properly in that, then they can understand that everything takes time. Nothing is really 5 seconds in our world if we're very serious. Everything requires a little bit of research, a little bit of checking, going through files and a conversation. And that's all of our time and experience that we should be paid for as accountants providing amazing services.
And Beck, just to double down on that a little bit, over the last year or two, there's been so much discussion within the industry around, how do you package up? Do you charge for? Are we doing this just to help our clients get through? What have you seen with regard to this process in your firm over the last 12 to 18 months in working with your clients? Has it resulted in any sort of contention? What has been the outcome of a lot of this? Have your clients engaged you for more services off the back of these discussions? Has it led to new business opportunities for you guys? Share a little bit about that, specifically with regard to all the COVID stuff.
I think it's a mixed bag. So everybody has a different circumstance, same way that COVID hit all different kinds of businesses in a different way. And we made different decisions based on billing for our clients, based on the client and what situation they were in. Particularly this round, I'm based in Sydney, and this most recent round of lockdown has been very harsh on the hospitality and fitness industry, which we have a lot of clients. So we actually stopped charging our clients for a period of time, but it doesn't mean that we stopped engaging them. So we still send an engagement for the additional work. And there's so many good reasons to do that. We needed our clients to understand this is the work that we're doing, this is what's involved. And these are all the terms and conditions you need to sign off for us to do this additional work. And there is this level of appreciation when you make that really clear what the value is that we've given them. And coming out of COVID now, we've actually had some of those clients who are quite concerned about what this looks like and are re-engaging with us to actually pick up additional services, particularly our hospitality clients, all around some cash flow forecasting. They want to know what the next 6, 12, 18 months looks like as we come out of lockdown slowly, and when they can start spending money or putting on new staff or investing in their business again. And because we were there with them and explained the work that we were doing for them during that period, they've been quite open and excited to have us on board for that extra work because they know we understand their business.
Yeah, that's really exciting. And I hope that's a real key takeaway for everyone today. The reason why we're discussing this is not just from a compliance standpoint, but also because it makes good business sense, as well, as we've just heard from Beck. So stepping into, I guess, a little bit more of a deep dive into what our obligations are, and this is where we'll open up the panel discussion. Beck, you've put a lot of this content together for us, but stepping through where the guidance is sitting, where can we go to find what it actually says around client engagements? And you've got a really neat little list here of items, but did you want to just talk us through kind of the key areas that are of focus and that we'll be chatting through today?
On the outside, there is actually quite a lot out there that tells us what we need to be doing for our engagements, and finding it is not as difficult as you may think. Depending on your registrations, whether you're an accountant or an auditor, if you're doing valuation services, the things you need to comply with will change slightly. But generally, all accountants and all CPAs must comply with the APESB, and in particular APES 305 terms of engagement. It's not a super long standard, it's actually quite short, and it's very clear on what we need to do as accountants when we're engaging our clients. And if you're a tax agent or a BAS agent as well, TPB Practice Note 3/2019 is one of my favorite standards, and not just because Greg's on the call, but generally it is written in plain English, gives clear, concise guidance on what they expect from us or would like us to be able to do with our engagements. And it's an item that we refer back to as a firm all the time when making decisions about what's going to go in our engagements. If you are an auditor, you're looking then at ASA 210, valuation services is APES 225, and taxation services, which is something, if you're a tax agent, it's not just 305 and the practice note you need to comply with. Also look at APES 220 taxation services. I think a lot of people don't realize as a tax agent that we actually have a specific standard there that has items in it around tax engagements, but there is one there and it's very clear as well.
Awesome. That's very helpful. And I've just linked the TPP practice note there, which again is sort of written in plain English, super helpful in the chat for those of you who are interested in checking that. Obviously after the webinar, because you're so invested in this that you're not going to be reading other content while watching our webinar. But now talking about what the letter should include. just drilling down a little bit on 305 there, it does talk to including an overview of what the services are, what you're expected to provide and the capacity in which they're provided, how often they'll be provided, who is responsible for what and when, how, what and when the services will be charged, and what is not included in the engagement. And the most, I guess, the most contentious item here, and the one that we get the most questions about, is, why should we include fees in the engagement letter? And so I'm going to open this question up to the three of you who are on the panel. And Greg, I might start with you actually. If you've got any insight around, what you've seen with regard to including fees in the engagement letter or not, does the board have a specific stance on that, or is it sort of up to the discretion of the practitioner? What have you seen to be the benefits? Have there been any issues where fees have not been transparently included in the letter?
It's a great question. We could probably have an hour, I suspect, Beck, if we wanted Nathan to talk about this. Look, from the board's perspective, and just to make it clear, we don't have the legislative authority to mandate engagement letters, but the practice note that we've got out there, which has been given a very good rap, a regulator that's been able to put something in simple English, I might take that quote later. We take it as a huge compliment. That note is, I think, great guidance in terms of what we strongly recommend. And I think you made a comment earlier, Ethan, ignoring what I'm saying today as the regulator, if you wanted to, it just makes business sense to get the engagement letter, because I'm going to provide an answer, one as a regulator, two also being in the profession, that it's generally, in my time in the profession and also as a regulator, we can't deal with fee disputes, just so you do know if someone that came to the board, but it's always a common area of dispute. So if you're upfront and you're transparent, you generally can try and avoid concerns around where and what you're going to charge. And then also, I noted in your slide earlier, I was quite surprised at the debtor days at being 80 days. So I'm not sure if that's people dragging out payment terms, or is it I don't agree with the fees, so you've got to go back and negotiate. So that I think is quite highlighting for me the business need. But from the board's perspective, I would absolutely recommend that you are as transparent as you can with what you're going to charge and what you're going to do, because at least you're upfront with where you're going to go, and that sets the right foundation going forward. I cannot overstate that so much. Back to you.
Yeah. Absolutely. Thanks, Greg. That's really helpful and consistent with what we've seen as well from the firms that we're working with, and the direct impact that it does have on debtor days as well. And Beck, have you got anything to add there? I know that you guys do include fees and you are transparent and include that within your terms. What sort of impact has that had in terms of getting paid on time by clients?
It has made life so much easier because our clients know exactly what we're going to charge up front. In the very rare occasion, which is probably 1% of the work that we do, we might not know how much something's going to cost if it's an out of the box big project, but we will at least go in with a daily rate for somebody, for the client, so that they have some concept of what they might be in for. What's great about that is when you do that at the beginning of the engagement and then reassess it every year, if your clients have decided that they're no longer on board with your pricing, then you haven't wasted any time and tried to bill them at the end for them to argue. It's just a better place to be up front. And even if I think about it as a business owner, there is next to nothing that I agree to take on as a service that I don't know in advance. I mean, just last week, I had painters out here to quote repainting the office. And there is no way I would engage them if they didn't tell me how much it was going to cost. I wouldn't just hope it comes in around about what I was expecting. I want to know. So I think that we as business professionals need to just treat our clients that same way and give them effectively the respect they deserve by letting them know this is what it's going to be. No one likes surprises, particularly not in this environment.
Yeah, absolutely. And now, Tony, coming to you, I've got a slightly different question for you, sort of moving away from the fee discussion, but I'd love to hear from CPA's perspective and from your perspective, across your career, what has been what do you think the opportunity is now for accountants and advisors, and how do you think the role of engagements or an engagement strategy, and specifically engagement letters, what does that play? What role does that play within the advisor-client relationship? We'd love to hear your thoughts and reflections on that.
Yeah, good question. The way I see it is the engagement letter has a very important role to play with practitioners. It sits fairly and squarely within the risk management framework of the engagement of the practice and how they're running their business. The idea being that the engagement, the practitioner puts in place appropriate engagement controls, sets in place the terms of the engagement with, and agrees them with their prospective or existing clients that they're re-engaging with. It gives them an opportunity to showcase the practice, to demonstrate to their clients that they're very interested in the relationship. They value their relationship with their client, and demonstrate that they're on the ball in terms of changes in the industry, in legislation, in requirements that may be facing their clients, and demonstrate that that they're concerned and they're open with that discussion, and just getting back to the fees, that they're open to dealing with the hard question, putting it up front, putting it on the table, expressing what that is, and just making sure that there's no misunderstanding when it comes to doing the work.
Yeah, absolutely. That's really helpful. And in terms of the, you alluded there that the CPA have just fired up this best practice team as well, which is a new initiative. Is there any sort of guidance there? I know that, in working with PI, they decided to include us in the practice toolkit for firms. CPA provide engagement letter templates and support and guidance around this as well for practitioners. Is that right, Tony?
Yes, we have indeed. So it's good to see that the templates which CPA have put together and are available on the website as a reference for practitioners to access. But also, it's very pleasing to see them as part of the practice ignition system as well. That it's embedded in there and working together nicely. Very encouraging. In terms of the best practice program, I'll love to talk about that. I could have a whole session on that, but I'll keep it brief. I think the real key there is that the best practice program is new. Gone are the days of the old quality review program where it was about identifying breaches or departures from professional standards, and making sure members correct those deficiencies. It's very much now focused on supporting the member, and it's delivered through a supportive program and framework where we look at the members' risks and their quality control systems and how they're managing those risks. So just picking up a few of the points earlier about fees and maybe engagement creep, these are risks that practitioners face. So how does the practitioner address these business risks, but also compliance risks with the way they're running their practice? And so with those two aspects in mind, we go in with a view to reviewing a practitioner's systems, processes, templates, how they go about conducting their business, and focusing in, for example, on the engagement letter as one of the tools that practitioners will use in terms of managing and mitigating risks relating around their debtors and their client relationships. So on the one hand, it can be seen as a positive, promoting the practice, but also on the other hand as a measure of mitigating risks. So we like to go in and have that discussion really with members and look to see and understand how they approach managing these risks, and perhaps where we could step in to help and try and find some solutions to those.
Yeah, that's really valuable, Tony. And I think that, particularly at the moment, and we're finding that we're getting questions all the time around this as well. Not just looking for staying in line, but looking for best practice. What are other firms doing that's working? What is the industry doing that's succeeding? What are other firms? How are they approaching this whole topic as well? So moving on, just kind of conscious of time, and we've got a bit to get through. And there's been a great question that's come through as well, just around the frequency of engagement, and we'll touch on that in a few minutes too. But another question we commonly get is, is it appropriate to engage at the group level? And so, Beck, I'll ask you, just with your experience here and insight into whether we should be engaging individuals or at a group level, and then I'll come to Greg as well on this point. But from what we can see, that the guidance does recommend engaging or separate engagement letters for each client in receipt of the services, because it's highly unlikely that you're going to be providing the exact same service to each entity within the group. And Beck, I'll just love to ask you the question: what have you found in practice there working with clients, whether or not you have engaged just with one engagement letter, one engagement for the group, or you've gone to the trouble of engaging each individual separately? What's been your experience there?
We moved firmly away from group engagements probably about 3 years ago, maybe a bit longer. But we've started really engaging each individual entity. And we have done that because there were a couple of circumstances where that group engagement did not really work out for us, particularly when there was either a relationship breakdown or a partnership breakdown. I did have a client that was engaged, and I had a group engagement for the company and then all of the different shareholders. Now, these were arm's length shareholders that were all investing in their different entities, and there was one big engagement for all of them. When they had a breakdown amongst that partnership, there was a lot of conflict post that, because I had done all this work, but now only one of those directors had signed the engagement. The other two didn't necessarily want to honor then that engagement. And I was really stuck because I didn't have all the right people, and I was doing work for other entities that weren't really specifically noted properly in that engagement, what work was there. And definitely the directors of the investing entities hadn't signed the engagement. So when we look at that and a couple of other circumstances, particularly around marriage breakdowns, engaging our clients individually just made more sense because they've got the right people signing the right engagements for the right work at every step. And because we use technology, it's not really a big problem for us to do that, and doesn't take any more time whatsoever.
Yeah, that's really interesting, and we can absolutely see that, you know, without a process around it, that it is extra work. But we've had really similar feedback from our customers as well. Greg, anything to add on that, just with relation to group engagements versus individual engagements? Any clarity you can provide there from the board's perspective?
I think and I like your slide you put up there in that regard. We do definitely recommend an individual. I think Beck's really pitched out some really good examples, and I think marital breakdowns is a very good one. And we do at the board sometimes see consumer complaints, where when a complaint comes into the board, the first thing our team will be looking for as well, who is the taxpayer, who is the client, and that's generally the first question that pops up. So if you assign something off at the group level, we've already got a challenge around who we're dealing with. So it really makes sense from a regulator perspective. We need to know who you're dealing with. But just on that level where Beck spoke about, it makes logical sense to have a separate engagement letter with each entity, because the reality is, if you've got a group holding entity, the services that Beck's probably providing there may well be different to an operational entity in a structure that's got far more level of activity. So it's axiomatic that the fees between the two will probably be different with the services. So we do definitely look for that from a regulatory perspective, because it helps us understand when if we do get complaints, we can narrow down our where we're going. But overall, it's just logical to do that. And I think the tools that are out there now, and I'm not giving you a pitch for the tools here today, they make this so much easier. I remember in my day many years ago, you know, people did it at the group level because it was easy. But I think those days have definitely moved on. Back to you.
Yeah, no more jotting down to the office and dropping off a paper engagement letter and waiting for them to sign it. Hey, that's
Absolutely.
long gone are the days. So coming now to the frequency of engagement, there's been a great question that's come through on the Q&A here as well, just with regard to should the engagement letter renew every year, and include the increase in fees and so on. Beck, love to share or hear your insight here. You mentioned earlier that you do engage with clients on an annual basis. So from what we can see, the engagements can either obviously be a recurring or ongoing engagement. There's once-off engagements as well. Obviously, if there's sort of project-based work that requires a separate engagement, you'd send that with its own set of terms and schedule and so on as well. But the key point here is that, you know, if there is a change to the services offered or any other significant changes, that constitutes a new engagement letter. And so at the bare minimum, you know, we've seen that at least an annual re-engagement is recommended. But I'm thinking even with regard to changes in software that practitioners are using within their firm, changes to privacy policies that are available, changes to data storage, all of those long T's and C's that you don't read and click accept when you're signing up for new software, that's got to be referenced within your engagement letter. And we see this as quite a significant risk for practitioners who are out there, particularly from our experience in working with our customers, when there has been data breaches, whether it's with their cloud accounting solutions that they're using or any of the other systems that they're using now, which has cloud hosted data. So Beck, love to hear your insight here just around how you approach this. Obviously, you're not going to be sending an engagement letter a week, but how do you manage that, particularly over the last 12 months when there's been seemingly changes every couple of months to the scope?
Oh, look, Ethan, during the early parts of this lockdown in New South Wales, when the New South Wales government was changing their mind about grants every 3 days, I felt like I was sending a new engagement every week at one point. So, look, under normal circumstances, absolutely not. We don't send them that often, but they do go annually at a minimum. And when there is a change to service or an additional service or a one-off item, we do create them, and we can do that so quickly now, thanks to the technology, that there's no barrier between us making sure that we engage, and our clients can accept so easily, and they like that process. And it's all about making the engagement accessible. So at any point in time, either party, whether it's me or my client, can actually see what they're engaged for, what that looks like, and it's easily accessible. We've actually trained our clients now that if they ring up or they email for some work that they know is not in their engagement, they're expecting us to send them a new one because we've been doing this for so long. Now, the great thing about all of that is not only re-engaging and looking at your services, one of the things that we didn't realize, well, I would say myself, didn't really realize is how often our engagement standards actually are updated, and the guidance from our membership bodies. We're constantly being told to change things and terms and conditions and add extra items into our engagements. And when you don't have a robust engagement process, you're not going back to look at those templates, you're not importing new templates, you're not updating anything. So your old engagements get incredibly outdated and almost feel useless quite quickly. And moving to that absolute must annual reconfirmation means our engagements are always up to date, which makes me much more comfortable as a practice owner.
Yeah, absolutely. I love the point there that you've made, that your clients are now expecting to sign new terms when they're asking you for additional work. And Greg, just reading through some of your responses and notes to this question as well, I can see you've added that as well. Would you like to add anything there just around the accumulation, I guess, of all those small additions to the scope, which end up being a huge drain, and you're charging your client $200 a year for a tax return and they're taking up 10 hours of your time? Has that been something you've experienced in practice?
Yeah, look, I think we've got to look at the end of the day, the recurring engagements. I definitely agree. You've got to revisit them every year. And from an overall perspective, if you think about it, the legislation changes all the time. And Beck just picked one up. I remember taking phone calls from colleagues in New South Wales trying to understand the rules with respect to what I term New South Wales version of JobKeeper. And the reality will be that as things change, you've got to update your scope of services, but you can't update it for every small nuance. But I take the view where it's becoming material or of substance, you definitely recheck in. And I think Beck's hit the nail on that head. The other thing I just wanted to add, and this is again a business issue, is it gives you an opportunity to have a discussion with a client. Advisors sometimes always looking for what's an opportunity to talk to a client. Well, if something's changed legislatively or something else, and that requires potentially changing scope, it gives you an opportunity to pick the phone up and have a chat with the client. So I see that as you're covering the issue, but also you're providing an opportunity for the practice.
Yeah, absolutely. And I know that CPA actually just had some changes to their engagement letter template recently that we were making those changes for members who had those templates imported within PI. But Tony, anything to add there just from CPA's perspective around the frequency of engagement, even if there was anything there with regard to engaging individuals or at a group level? I know that the professional standards team often send out engagements and amendments to the different templates that are available. Do you find that this is something that members on the whole are engaging with, or do you think it's something that needs to be given more attention?
Firstly, I agree wholeheartedly with the other panelists in terms of a new engagement letter when things change significantly, but also annually, probably as a matter of course, just keeping things fresh, and having an opportunity to again enter in a discussion with the with your client and you know, develop that relationship further. It's probably a great opportunity. From CPA's perspective, in terms of the engagement letters, I think largely it's about making sure that they're relevant and up to date in terms of requirements. Largely, in terms of whether matters ought to be addressed at the group or the individual letters level. I mean, I take on board the comments of the other panelists. I think very important issues. Again, it fits fairly and squarely within the risk management area of managing that relationship. But there's probably other arguments as well in terms of you know, engaging at the group level. So it probably comes down to, you know, fit for purpose or the circumstances that you're dealing with. Whether it's you know, you could very well have a family business that's running a group of entities, and maybe they're all coming in, all sitting under the one sort of ownership structure. But certainly where there's different concerns and ownership, well then, yeah, you probably want to look at the individual level and look at it a bit more closely.
Yeah, absolutely. And we'll be sharing some more information later on, also in the follow-up. But those templates that are available from CPA are regularly updated, reviewed, and very comprehensive as well. So I'd encourage people to go and check those out, the members that are on the call. So that's fantastic. Thanks to everyone who's weighed in there. Now, just wanting to focus on some of the benefits that we've seen across the board here, if I can get my slides working properly, of actually implementing this strategy. So I'm going to ask Beck firstly. I guess, you know, you've kind of shared at a high level what the impact has been with regard to your client relationships, the fact that they're expecting new terms, But you know, across the board, also I'd love to hear, you know, the impact on your team and your staff, and empowering them to actually engage with clients and take the burden off, you know, everything sort of needing to funnel through yourself. What have been the benefits in your practice from that perspective of putting in place this structure around your client engagement?
There's so many benefits. And if I just talk about the team for a second, we've made that decision to really make that engagement process quite open to the whole team. And because we use templates, they're able to at least in a minimum draft an engagement for a client. They're also able to go in at any point and look at what the engagement is for a client and find them really easily. It's super clear where we can find them in Practice Ignition just by going to the client. So that means they know every time that they're doing a piece of work whether or not they're engaged, and they won't do work if we're not engaged. And that means they know that there's going to be recoverability on the job that they're working on. And I can tell you, when I was a junior, there was nothing worse than getting to the end of a job, doing all this stuff, and then ending up witnessing a fee dispute with your manager and the client, and knowing that your time's going to get written off. That's incredibly frustrating as a junior. It's not motivating. So as you work, sort of go through your progression and know that you've got that greater job ownership and greater job satisfaction as well from knowing that you're really contributing to the team. Now, the year that we fully implemented Practice Ignition and made sure that there was no work that was not engaged for, on a business level, we had our revenue increase in that year. I think it was about 30% just from billing everything that we did, because we captured it in a better way. Even though we did timesheets, if we had already sent a fixed fee and then something popped up during the year because we hadn't engaged for it, we would often just write that time off and be like, oh, well, next time. When we moved away from that and really took control of that engagement process, the recoverability increased so dramatically that we almost didn't need to get any new clients that year, and we still increased our revenue and had significant growth. And the best part about that kind of growth is that it falls straight to your bottom line, because you were already spending that time, you were already incurring the cost on those wages, you were already doing all that stuff, you just weren't charging appropriately for it. And we are all guilty of doing that in our industry, because we just get too busy and too ahead of ourselves.
Yeah, absolutely. And we've seen similar feedback with regard to actually just spelling out and communicating the value of all the work that you're already doing for clients as well. And I think that's a huge opportunity for, you wouldn't find too many accounting firms that are growing 30%, you know, year on year. So that's a great tip. So Greg, anything to add there, just, you know, at a high level from what you've seen working with practices, and or Tony, but yeah, start with Greg, and any other sort of anecdotal comments there as we think about the benefits?
My anecdotal comment would be, and it's interesting, Beck, as you were chatting, I was just reflecting on the improved profitability. And I'm going to make two comments here. One as a practitioner, two as a regulator, that hopefully that'll see improved profitability within a practice. So practices won't sort of be enticed into a race to the bottom and then trying to push more work through the practice. So hopefully that'll be a really big benefit for a practice. But then what that means potentially for a regulator is that when you push more work through a practice in the same amount of hours, that sometimes aspects of supervision and control sort of wax and wane. So there's potentially a couple of really good benefits there, both on the practice but the regulatory side, just at a high level.
Yeah, that's a really good point that you've touched on there, Greg. And Tony, you've sort of mentioned something similar there in just your notes in preparing for the session around, what is the nature of compliance advice moving forward for firms and the opportunity there to be demonstrating more value. I think that's a really key point here, and that we've seen that questions come through in the chat just while we've been speaking. That there is that sort of pressure on fees, and as people are becoming more transparent, you're seeing clients shop around and what have you. It's the more info is available and it's easy to scope around things online. Like Tony, where do you see the opportunity for firms now to differentiate themselves and be confident in their pricing?
I think it's probably a case of being able to showcase the firm, not necessarily a race to the bottom in terms of a fee. I don't think accountants sort of enjoy that exercise, but I think it's a case of perhaps putting your best foot forward in your discussion and dealings with the client, and coming to terms with those in a well-worded engagement letter that clearly spells out what the terms are and what value perhaps the client can get out of this relationship. What are they looking for? And it demonstrates from the members perspective that they can express that they value the relationship, that they're open in their communication, they're willing to discuss the identify, understand, come to terms with what the requirements are. And with all of the changes that are taking place, as mentioned earlier, I mean, it's a case of listening and monitoring to those requirements and being proactive and putting in place, acting on a timely basis with with your clients and addressing those issues. So it goes both ways. It goes from the practice viewpoint of making sure you're avoiding situations like scope creep and not writing off time that it just wasn't agreed to, but also from the members, the client's perspective, in terms of having in place an arrangement that they understand, that they've agreed to.
Yeah, absolutely. Thanks, Tony. Well, I think we've covered off on most of the points. I did want to ask one more question to Greg, because I absolutely loved the points that you made on your thoughts prior to this webinar. But just in terms of how the nature of advice and how that might change moving forward, you had a really key point in your notes there, Greg, just around the impact of technology, because it's the next section I'm going to talk about in this webinar. It has been a hot topic over the last couple of years, and while software can complete many of those basic sort of automation tasks or whatever, the absolute value of a qualified and experienced accountant and the advice that they can bring and the reflection on the numbers and so on is more valuable than ever. So we'd just love to hear your thoughts on this whole technology piece. There's been that sort of fear-mongering marketing message out there that it's going to steal your jobs and whatnot. But I'd love to hear your sort of reflection and your predictions or your picks for what the industry is going to look like moving forward. Big question, but so there you go.
As a regulator, I'm not going to pick who's going to be the next unicorn out there, so I won't make any predictions on the future IPO candidates. But look, the acceleration of the digitisation of information in the COVID world it's just been unprecedented for all of us. And that'll be the same for everybody on this call. From my perspective, this acceleration, I think many of us will probably sort of wonder at the change, but the reality is, and I've made some comments in my notes, which you picked up rightly so, is that the day-to-day processing tasks and the other really insightful things that technology can do within practices and improve the productivity of the practice does not overweigh the fact that the practitioner, I'm looking at Beck here, Beck's come up on my screen, that the wisdom and experience that someone can provide over a telephone call with a client is absolutely, in my view, paramount, and that will not go away. They're looking for that trusted voice that says the numbers are that, but tell me what's behind the numbers and what are they doing. So I'm always of the view that, yes, there's some of the day-to-day tasks that are going to, and we're seeing disappear. That has hopefully improved productivity with a view to freeing up and getting practitioners to a point where they can hopefully, and I'm trying to put my business hat on here, get a greater return per hour because the client is seeing the value aspect of their advice, which they're prepared to pay more for, rather than they might treat a return that's prepared as more of a commodity. And I hate to use that term, but that does come up sometimes. Hopefully that just gives a bit of insight for people.
Yeah, absolutely. Thanks, Greg. And I think we'd all be resonating with that. It is absolutely not replacing the value that's clearly there from that personal relationship, which really leads well into the next section that I'm going to talk about around the role of technology in streamlining this process. And a little bit of a shameless plug. We did put on this webinar, but I just did want to talk a little bit about how PI helps with streamlining this compliance process around engagement letters specifically, and around the partnership we've developed with CPA to provide the engagement letter templates within the product. It is something that's used by over 5,000 firms around the world now, and so I really think that there is value to be added here. And as Greg said, what we're aiming to do is just free up capacity to focus on that whole value communication piece, working with your teams, working on your business, rather than getting sucked into spending too much time on typing out engagement letters and the like. So over the next 5 minutes, I'm just going to explain the key things that we do, primarily being the generation and automation of creating engagement letters that are commensurate with the scope of work for that proposal. And so it delivers this digital engagement letter and package to a client that includes all your branding, your proposal of the work. It clearly outlines the fee structure as well. And what it does is just provides transparency and confidence around exactly the services that you are providing, what the expectations are of both the practitioner or the firm, and also from the client as well. For those who are using cloud-based general ledger software as well, it does automate from an invoicing and payments perspective as well. But the key thing that we look to solve is really freeing up that capacity around the proposal and engagement letters piece. And Beck, I'll ask just for your input on this in a few minutes as well, with regard to the clarity piece you alluded to earlier, being able to quickly search up clients and see what they're engaged for. But a major change that we've made over the last sort of 6 months is providing flexibility within the proposals, but specifically billing flexibility, because we know that there's different there's different styles of billing, whether it be fixed, whether it be hourly, whether it be unit based. You're now able to combine all of those within one proposal in the software. And that gives you a lot of power to be really specific around what each of the services cost. And so whether it's payroll per employee, or whether you're doing some advisory work or some project-based work on an hourly basis, and that's combined with a fixed quarterly charge for your quarterly compliance or whatever it is, the ability to combine all of those and provide total clarity and transparency in your proposal as to, this is what we're providing, this is what we're charging, this is what we expect, and this is what you get from it, is really what we're aiming to do here. And we've had some amazing results from practitioners who have put this in place in their firm. Also, the ability to have multiple options within a single proposal as well. And a surprising number of firms have taken this up, where you're actually providing multiple price points or packages to clients. And what that does is it demonstrates the dollar value between different levels of service. And Beck, I might just ask you to add here. It's a common thing that we've seen, just a lot of questions and a lot of interest in how do we price services? What are other people charging for these services? Does the client perceive this service as valuable? Am I overcharging? Am I undercharging? Am I going to leave money on the table if I price up front? I'd love to just get your sort of reflection on implementing PI and providing that transparency within the proposal.
When you move to fixed fee pricing, I think that's the first thing that people always ask is, well, how much do we know what that job's going to cost? And if we're very realistic about it, we know how much this work is going to cost. We've been doing the same work, or in some format of the same work, for our clients for many years. We've already determined internally what our hourly charge out rates are. and probably you're either experiencing write-offs or write-ups, hopefully, in your firm at the moment. So even when you're doing time billing, you know a client's only going to pay $3,000 for a job, and it doesn't matter whether you got WIP of 2,000 or 4,000, they're going to pay $3,000. So you all have already implemented fixed fee, you're just doing it in arrears, and it's only those real outlier jobs that are a total surprise, or where you haven't communicated properly during a job when something's changed with your client. And at that point, it's absolutely vital you need to raise with your client, oh, we were wrong, we found something. You should absolutely be bringing that up during the engagement, because whether or not you do time billing or fixed fee billing, the client's going to push back on that if you don't tell them in advance. So this is all around having everybody on board together and everybody on the same page with the invoicing. And I used the paint explanation before, but like if you took your car to go get serviced, you expect a phone call from the mechanic if they find something that's a total disaster, or they have to change all of your tires or whatever. You expect that phone call. So from an accountant, if you find something wrong in your client's file, it's going to change the value of this job, then you need to call your clients and tell them.
Absolutely, and we've seen that with relation to getting paid as well. And it is a surprising statistic, like you mentioned earlier, Greg, like the average debtor days for firms. And I think that what we're trying to, the way that we're solving for that is giving you the option to actually capture client payment details up front. So whether it's a re-engagement, an annual re-engagement, or a new client, you can actually collect those details up front in the context of the proposal. So you're not doing all this work and then spending 3 months chasing the client for payment as well. The benefit there for the techies that are on the call is that it automatically raises and reconciles all the invoicing and pretty much automates the accounts receivable function for those engagements as well, which is great. So fundamentally, what we've seen as we look to wrap up here is just the clear articulation of services, which we've seen as a common theme throughout this entire session today, really goes a long way to minimizing disputes. So whether it's dealing with the hard stuff up front, actually articulating the value and all the inclusions within the engagement, it fosters trust through transparency and gives your clients a lot of confidence that your pricing is consistent as well. And I guess the key thing that I wanted to share today is that CPA members, for those of you who are members on the call, which I assume would be most of you, we've actually integrated the CPA engagement letter template within our product. And just this week, I had some updates sent through from CPA, and we were able to run through and automatically update several hundred firms' templates within their account. And what that means is, like, as soon as the update to the template have come out, your team's got access to the most up-to-date version. There was no need to go and replace all your PDF or your Word documents within your virtual cabinet. It was all stored there, ready to go and ready to use in the next client engagement. And if need be, you can actually send an updated engagement. And it takes about 3 minutes to update the template, resend it to clients, and get sign off if there's been a material change, which I think is incredibly valuable. So I'll be sharing the link to the landing page where you can get more information about this partnership. It's also in the Public Practice Toolkit on the CPA website as well. And we've seen a lot of firms give us some great feedback around the fact that they've got an industry body verified engagement letter within the software now, and it's not up to them to write their own. Beck, any